So, Nio is currently down 85% from its all-time highs. So I guess the only thing similar between Nio and Tesla is the volatility around the stock price. So in this video, we'll seek to explore whether Nio has the potential to deliver Tesla-like returns or just Tesla-like emotions because of the stock volatility. So let's first understand why investors were interested in investing into Nio in the first place. Personally, I think that there were three critical pillars to the entire Nio story. Firstly, electric vehicles by and large sits on this incredible tailwind as the world transitions towards electrification. Coupled with the fact that China currently retains its position as the #1 country in terms of car sales volume for more than 10 years now. So Chinese EV companies seems to be in the prime position to take advantage of this trend and also this transition. Secondly, Nio unveiled an interesting solution where they introduced their battery swap technologies in hope of eliminating the wait time for drivers charging their EV. So these essentially greatly boosted their perception as being both innovative and also enterprising. And last but not least, thirdly, Nio was essentially crowned as the Tesla of China back in 2020 and 2021. So one of the main reasons for this comparison is purely because of the high growth rates both companies seem to enjoy, coupled with the fact that they have eerily similar both growth and marketing strategy. Nio decided to essentially emulate after Tesla. So back in 2020 and 2021, Nio was essentially delivering triple-digit growth rates in the hundreds of percents year on year. And that was when investors started suggesting that, hey, Nio was essentially the early stage Tesla, very much like when Tesla was ramping up back in 2016. However, if you were to really take a closer look at Nio's current strategy, we can actually observe a few key differences between them and Tesla. So the most obvious distinction is really the product positioning of both companies. So if you to really dig deep and to really understand the philosophy of Tesla today, they have a very clear mission, which is to accelerate the world's transition to sustainable energy. And because of this goal, there was actually a big hoo-ha that was created within the Tesla community when Tesla decided to cut prices across the board much earlier this year. And Lipin, which is the CEO of Nio, actually proclaimed that, and I quote, Nio would not be participating in the price war in the world's largest car market, which is China in this case, and that Tesla has no power to define the prices of autos in China, unquote. How feisty, but I'm starting to like this man. But side note, do understand that liking the man, liking the company, and liking the stock are three separate issues. And on top of that, if you were to pay closer attention to how both companies essentially manage their infrastructure network, Tesla focuses on both scale and utility in their supercharger network. And for now, it does seem like they're opening up to other automobile brands as well. While Nio, on the other hand, wishes to retain control and to provide a special experience with their proprietary battery technology, and also coupled with the Nio houses that commands a certain level of prestige that Nio owners can enjoy and resonate with. So to provide you with an analogy on the spectrum for car fanatics out there, Tesla is much closer to being a Toyota, while Nio is much closer trying to position themselves like a Ferrari. That said, I'm not insinuating that the stock price will follow their predecessors. This is just an analogy to really have a better grasp and understanding of how they're trying to market and position their products. So for the Tesla supporters out there, please hold your horses. So here comes the biggest question. If Nio is no longer modeling after Tesla, will they be able to give Tesla-like returns to Nio shareholders? The short answer is, beats me. But the long answer is, let's try to investigate Nio's current positioning and how they're able to capture more market share. So for context, based on February 2023 data, out of the top 20 best-selling electric vehicles in China, BYD, which is Build Your Dreams, still retains the title of being the king of electric vehicle in China, with Tesla coming in at a close second. And before Tesla supporters come and attack me, I'd just like to put a quick note here. BYD's car sales actually do include hybrid vehicles as well. So if you really look at it from the perspective of just sales on full electric vehicles, yes, Tesla is still #1. However, want to take a quick guess on where Nio is on this ranking list? 18th. Yes, you have heard it right. 18th on this position. So technically, it's still pretty good considering that China is a humongous market and it's an extremely competitive landscape. But I just wanted to emphasize on the difference in scale and position when you look at the two companies, which is Tesla versus Nio. So no, I don't think Nio is anywhere close to Tesla, and I'm highly skeptical that Nio will be the next Tesla, at least in this decade. So the next Tesla will probably still be Tesla. So then many investors might be interested to know, why did Nio actually collapse by 85%? The valuation of Nio as a company essentially fell off a cliff. So circling back to their valuation, I think it was primarily due to three main reasons. Number one, the growth story of Nio was significantly impaired. Number two, there is continued losses and there is a weakening of Nio's balance sheet. And number three, there's ultimately a revaluation in terms of the general markets because of the rising interest rate environment. So let's look at it one by one. So firstly, it's quite hard to retain your title as the Tesla of China if your growth rate actually plummets from triple-digit growth to now even struggling to maintain a 20% year-on-year growth rate. And do note that Nio has a much smaller scale compared to many of its competitors. Particularly so for growth companies, where valuations actually do take into account future expectations. And when these growth companies don't deliver, the markets will punish them, and they'll punish them hard. Secondly, on top of the dwindling growth rates, Nio's expenses actually went through the roof as well. So when comparing the full year between 2021 and 2022, operating expenses nearly doubled, net income losses more than tripled year on year. So coupled with the fact that Nio actually sells luxury vehicles, or at least much more luxurious on a relative basis, with relatively higher margins compared to industry averages, their operating margins seems to just worsen by the quarter. So other than these horrible financial metrics, Nio currently has around 6.6 billion left on their balance sheet, and with a 2.2 billion operating loss in 2022. So if to combine both of them together and do some simple math, Nio can only remain unprofitable for the next 2 to 3 years if they are currently burning at this rate, before shit hits the fan. Thirdly, with the rising interest rate environment, there was a general revaluation to the downside for many of these high growth companies, particularly so unprofitable ones. However, for Nio shareholders, there seem to be a few catalysts that investors might potentially look forward to as well. First, Nio has expressed ambitions to actually launch 5 new models in 2023, and this new launch might enable them to penetrate into initially untapped markets and serve different market segments, and this will aid in their growth moving forward. Number 2, Nio has also expressed their interests and plans to expand globally, further concretizing their footprint in Europe and potentially also expand into the United States as well. And number 3, a potential re-acceleration in terms of demand of electric vehicle back in China as consumers tend to build back confidence to spend, consume and travel again. So this then begs the most important question on most of the investors' mind today. Is Nio still a buy? Personally, I think that the automobile industry is a highly competitive marketplace, especially in China. Yes, even though Tesla managed to carve out a niche on their own, it does not mean that every company has the ability and foresight of Tesla to emulate them step by step. So I've spent a considerable amount of effort in this video trying to explain why I don't think Nio is the next Tesla. So for investors who are interested in starting a position in Nio, please do so because you want to own the company Nio and not because you are owning the next Tesla. Furthermore, Nio being a relatively young business compared to its bigger brothers like BYD and Geely, it has not really proven itself to investors on the ability to generate consistent profits and also having a sound business model. So that's just a point to take note. From a valuation perspective, some of you might be wondering, hey, is Nio cheap enough? Whatever cheap enough even means. If you were to use the most widely used financial metric in the investing world today, which is the PE ratio, oh wait, you can't really use a PE ratio for Nio because they don't even have earnings to begin with. But anyhow, if you want to look at the valuation of some of these growth companies, another financial metric we can look at is the price to sales ratio. So by looking at price to sales ratio, at its highs, at its peak, Nio was trading at around a 33 price to sales, but it's currently at around 1.9 to 2 times. And if you to really compare it to their mature counterparts in the automobile business, Toyota has a price to sales of 0.7 and Ferrari has a price to sales of 9.8. So where do you think Nio should sit on this spectrum? I'll leave it up to you to decide. However, if you just look at it from a historical perspective from Nio's valuation, I would not necessarily say that Nio is expensive today. That being said, you should look at evaluating Nio fundamentally as a business and don't go on with the thinking that, hey, Chiking, Nio is already down 85%. How much more can it drop? The bad news is, after being down 85%, Nio can still go down another 85%. That's how the stock market works. So don't look at it from a historical perspective, but judge it at its core on business fundamentals. So in summary, the intense level of competition, coupled with the rate at which they're burning cash with no signs of profitability soon, and also on top of the decelerating growth, I personally would stay away from the stock. So I would classify Nio into the basket of speculative stocks. And for those of you who want to bet on this story, I think position sizing would be the best strategy. So in my humble opinion, I think Nio is not going to be the Tesla of China, and for investors banking on it, I think you'll be in a while ride. So which stock comparison would you like us to do next? Feel free to leave in the comment section down below. So this is CK from Piranha Profits signing off. Until next time, keep winning.